Hi, this is Zach here from Zach's Traders Cafe with a look at the major markets on Thursday, the 13th of October. Starting off with the FTSE 100, and looks as though it was the right thing to do to put in this resistance line there from April, creating a rising wedge, bullish, rather bearish formation there for the UK index. Has actually started to pressure the leading UK stocks today. We've been below 7,000. Risk of a journey towards the 20-day moving average at 69.18, which is the floor of this wedge. We've also seen a break of this uptrend line in the RSI window, which is actually leading in this indicator on a sell, at least for aggressive traders, and worth watching that as well. But at least at this stage, we're buying on dips towards 69.18 for the UK index. Only above 7,200 now breaks the bearish setup of the rising wedge. Onto the DAX, which was never quite as sprightly as the FTSE 100, and here we've got it struggling towards this notional support area around 10,400. Still a bit early to say that this is broken, but we do have this double failure so far in the RSI window above the 50 level, so that is a leading indicator on a possible sell there. And really, the message at the moment is that unless there's a break of this September resistance line, the top of this notional triangle at 10,600, one could be and should be a seller into strength on the German index, targeting eventually as low as 10,015 at the 200-day moving average rather. Onto the Dow, and here you can see that this is also right on the brink in terms of a breakdown. 18,100 was the line in the sand that we focused on, or have focused on in recent days. End of day close below that, which is in fact we're below that now in pre-open, pre-market open trading. Below 18,100 it could risk down to 17,638 at the 200-day moving average. This RSI uptrend line is also broken around the 50 level as well, and that suggests there could be some downside follow through, if only towards 18,000. On to the S&P, where it's all about really holding 2120. We've broken a 2140, which was this uptrend line from May, so first warning of a possible change here. If we break 2120, it's difficult to see how this market could avoid heading towards 2068 at the 200-day moving average, already up above 2165, and the 50-day line really negates the downside argument there. On to the Nasdaq, and here we've got what's starting to look like a rising wedge sell formation. The reason for saying that is that we've had the failures, extended failures at 4,900. All that's missing now really for the bears is an end of day close back below the 50-day moving average of 48.11. That's going to provide some support initially, but a break of that could be dangerous for the bulls, especially with the RSI now back below the neutral 50 level. The target then would be 46.56, initially the September support. For the currencies, we've got sterling still under pressure, not as bad as it was before though, so slight hint that it is able to, or may be able to, recoup some of its recent losses, but at least while below, let's say 123.66, which was the high at the beginning of the week, we do have the risk of at least a final retest of the 120 or sub 120 area before this market actually finds its feet. For the euro dollar, below 110 is the headline for today. Not really a level in terms of the technicals, more just the psychology of it. But the big break here, breaking 111.50 in the 200-day moving average earlier in the week, and really well below that, heading towards 109.50, or down to 109, which was the June floor on this market. On to dollar yen, which has perhaps been the best behaved of the major crosses in recent days. Here we've been probing above the 104 level, just breaking through that 104.32 September peak, and then coming back again. So a possible bull trap rather below that. But at least while there's no end of day close back below the 10-day average of 103.15, one would be a buyer on dips for an eventual or a possible push towards 106 or 107, which is post-June-July resistance. Finishing off with gold, where so far we've effectively held the 1250 zone. There is a line of support there from earlier in the year at 1250. We've got the 200-day moving average at 1263. We really need an end-of-day close above the 200-day line to suggest a new leg to the upside, and perhaps 1270, 1280 is on its way. That's it from me. More updates at the same time tomorrow.